All right. Startup Showdown episode 1 is now officially live. We have quite a few registrants, so we're going to let them start to trickle in. But those of you joining us just now, thanks for participating. On our opener slide here, you can see the investors and the startups that are going to be joining us for our very first ever Startup Showdown episode. This episode, of course, being that we are the New Jersey Tech Council, focuses on both VCs and investors and startups that are based here in New Jersey. For those of you that are tuning in, and this might be your first ever event with the New Jersey Tech Council, we are an organization about 24 years old based in New Jersey, focused on propelling innovation and supporting entrepreneurs and tech companies in the state and in the region. And we represent over 1,000 member companies and a massive amount of employees and organizations across the state, obviously focusing on promoting technology when we can. So with us today, we've got an incredible lineup. The show is going to run with a little bit of intro from each of these fabulous presenters and our fabulous investor judges. Then we're going to get right into our startup pitches. First is going to be Layer Metrics with Claire. Then we're going to do Welnys with Heather and finish with Volan with Michael. So I would just love it if each of you would just go around. Let's start with Kelly and give a brief introduction of yourselves, just 30 seconds so everyone can know who you are. Then we'll go through Allison and Mark, and then we'll head over to the startups, Claire, Heather, and Michael.
Great, thanks, Jasmine. Kelly Ford, I'm a general partner with Edison Partners. We're based in Princeton, New Jersey. We're a growth equity firm focused on fintech, healthcare tech, and enterprise software investments. We've been around for 34 years, actively, obviously, investing in New Jersey and throughout the Eastern US. We are focused primarily on companies that are sort of 5-6 million revenue to 20 million in revenue, mostly Series A's, but pretty flexible as long as they're high growth, capital efficient companies.
Excellent. Allison, thank you for joining us, Kelly. And Kelly is also a member of our board of directors.
Hi, everyone. My name is Allison Williams. I'm the director of MVP Labs at Newark Venture Partners. Newark Venture Partners is a $45 million fund backed by 7 corporates based in the Newark area: Audible, Prudential, Panasonic, TD Bank, Dun & Bradstreet, RWJ, Horizon Blue Cross Blue Shield. We've been around for about 3 years. We've invested in over 80 companies. We just launched our second fund. We invest solely in B2B SaaS companies. We typically like to lead or co-lead at the seed or Series A level, but we also do invest earlier in companies that we feel passionate about, but they're a little too early for us to lead a large round. And that's where my role comes in. I invest checks 100K to 225, and then our founders are put into our labs program where we apply a variety of resources to help our companies grow and scale. We host 2 cohorts every year. We're currently in our 8th cohort. Go to our website to apply, or just reach out to me directly if you're interested in learning more.
Thank you. Mark?
Great. And Jasmine, thanks very much for putting this together today. And it really is a pleasure to be sitting alongside virtually with Kelly and Allison and our 3 entrepreneurs. So my name's Mark Kolb. I'm an entrepreneur turned venture capitalist. I'm a partner with Tech Council Ventures, and we are a New Jersey-based early stage mid-Atlantic investor. Pretty technology agnostic. We're just looking for terrific entrepreneurs and great companies. And we invest generally between $500,000 and $2.5 million in the first round. And we're very engaged investors. So we believe that we're partners with our entrepreneurs and portfolio companies, and we just work diligently to support their success. So glad to be here, Jasmine.
Thank you, Mark. All right, now on to our 3 Jersey-based startups pitching today. Why don't we start with you, Claire, since you'll be going first.
Hello, Jasmine. Thank you very much. Layer Metrics is a monitoring company, and we are focused on quality control for 3D metal printing. Very excited to pitch here today, so thank you for the invite.
Awesome. Thank you for joining us. Heather?
Hi everyone, my name's Heather and I'm the CEO and founder of Welnys. I'm also the winner this year of the Tri-State Women's STEM Entrepreneur of the Year Award. It's quite the mouthful. And the MITRE Women in Digital Health Award.
Awesome. Thank you for joining us. Michael?
Hi, thank you everyone. Michael Betua. I'm the CEO and founder of Volan Technology. We're based in Hoboken, New Jersey, and we've been working on building a precise location positioning technology that's AI powered for the last year and a half. And I've got an interesting story to share with this current pandemic going on and how it applies to that.
Awesome. We look forward to it. Well, thank you all again for joining. And as a quick note to those tuning in, if you have questions for these startups as they get into their pitches, I encourage you to use the Q&A function. I will be moderating that section, and after each startup's pitch and hear the feedback from our investors, I am going to be asking them a couple of those questions as well. So if our investors haven't asked something that you're curious about, or you just have a particular question about the product or startup yourself, please do share in that Q&A function. Finally, for anyone who's wondering or might not be able to attend the entire session or has a colleague that might be interested in this content, we are recording, we are streaming live to Facebook, and this will be available on the Tech Council website in another day or two. So you will be able to rewind and enjoy the show once more if you're interested. So from there, we are going to let Claire take it off with her 5-minute pitch. I am going to be timing it, so I will do a little motion if we hit the 5-minute limit. But we'll leave it off to you.
Hello, I'm just going to share my screen. So can everybody see my screen?
Yes.
Great. Hello, my name is Claire Murphy and I'm CEO for LairMetrics. We are a monitoring company for 3D metal printing, and it's very nice to be here with everybody. So, as we know, 3D metal printing is fantastic. However, it is unreliable. There's a lot of variations in it. And our mission is to deliver confidence in build integrity for 3D metal printed parts. So, I'm trying to go to the next slide. There we go. Why is 3D metal printing unreliable? Well, it's a very complex process. Powders are melted using a high power laser, and layer by layer the part is built. This is a very dynamic process and a lot is going on. So our sensor system captures an amalgam of real synchronized data using a single camera to deliver this information to the user during the build process and enables corrective action. The industry is craving quality control to such an extent that the US Air Force is hosting an AM Olympics to address this issue. So who are we? I am an accountant with a passion. I enjoy being an entrepreneur. Dom is my husband and a CTO, and we're working with subject matter experts across the industry, and they're industry-centric specialists. So we have a quite comprehensive team. Trying to go to the next slide. We're working with Oak Ridge National Labs on a DOE-funded project to validate our system. We've engaged with 3D metal print manufacturers, and we are lining up pilots for the end of this year. So the 3D market is expected to grow at 25% over the next few years. The current market size for AM products and services is 15.8 billion. The 3D metal printer segment is 2.5 billion. And we project annual revenues of 50 million per annum by 2024, with a combination of hardware and SaaS as an annual recurring revenue. Our business model has two channels: direct OEM to printer manufacturers and retrofit to existing printers on the market. our hardware will sell for 50,000 and an additional annual recurring revenue SaaS of 20,000. Our future customers are 3D print manufacturers such as 3D Systems, Trump, EOS, and end users such as Honeywell, Airbus, Pratt & Whitney, multiple industry. As we know, 3D metal printing is entering the manufacturing market, and our monitoring system will enable an explosive shift from what it currently is at a high-end, low volume to a rapidly high volume. We currently have an open round. We're looking for to raise 500,000. We are matching the DOE approved fund for the validation with Oak Ridge National Labs. Also, NJEDA offer attractive incentives that we will be eligible for, such as the NJ Ignite and the NJ Accelerator program. Also, Lyrametrics is a New Jersey-based woman-owned company, so there's the 25% tax credit for investors. We are targeting an exit in 2025 of 165 million. This is based on a 3x valuation of our 2024 revenue of 55 million. Thank you very much for your time, and if you have any questions, I'd be delighted to answer them. I also have our CTO Dominic here to help me answer any questions that I may get stuck on a technical side. Thank you.
Thank you. All right. So I think we would love to hear and start with Kelly's feedback and any questions you might have. And Claire, you're welcome to stop sharing the screen unless you'd like to keep the presentation up. It's totally up to you.
Okay, thank you.
Thank you, Claire. I guess I just have one question. I don't know this space well at all. I'm more of a software gal, but the addressable market's obviously very large. And I understood in the beginning how you've described your problem qualitatively, but is there how do you quantify the size of the problem or the opportunity that you're solving for your potential customers?
So quantifying the market, I'm getting feedback, sorry. It's a difficult one because currently there's quite a high scrap rate, and it's high-end, low volume, and it's used for prototyping, and they're starting to use it in manufacturing, but because it's so difficult to replicate each part consistently because there's so much variations, they're trying to set up standards, for 3D metal printing. Lloyd's do it and things like that. So quantifying the market opportunity is, in monetary terms, it's difficult to put a number on it, but the fact that the industry is craving monitoring so that they can explode into the market and have it mainstream is a very significant. There's currently 11,000 3D printers in the market, and each of those printers were sold for in excess of 250,000. They do not have the monitoring capability that our system will offer. So we will retrofit to those printers, as well as integrate with new printers that are being manufactured.
Thank you. Yeah, I appreciate that. I would just think more about how you can sort of not only describe the problem and the technology and how it solves for it, but the why, right? The business case behind your value proposition. That's all.
So a lot of these products are used for Air Force, for you're putting them into space. So you want your product to be reliable. The beauty of 3D printing is you can make products that you couldn't make before, but they're only as good as they are reliable. And if they're not reliable, and the article on my presentation is really very informative of the benefits of it. you know, it's health and safety, and for the aerospace, aviation, automotive, and medical, there's applications. Like you want your hip to be not to fit perfect, your replacement hip to fit perfectly into your where the other one came out.
Great. Jasmine, do you want me to jump in?
That would be great. Yes, thank you.
Okay, excellent. Claire, thank you so much for the pitch. So, you know, similar to, a little similar to Kelly's point, I think just some feedback. I think market sizing up at the front of the presentation is always great because, you know, venture capitalists were always thinking about what is the opportunity, what is the exit potential of your company. And I think, you know, your space, it might be a huge market. It feels a little niche-y, so you're gonna have to do some educating just on the market size. And I think putting that up front, if it is a massive market, you're just gonna get more excitement and more interest, and the investor will lean in a little further. And then similar to Kelly's point, you're talking about the shift going to 3D printing because your technology is able to get it right. What percentage of the market will make that shift? And I think it's going to help you define your market size. And then you need to go a little more into the problem. So is it because, why will they invest in this new technology once it works? Because of your company? Is it because it's creating an actual better product? It's a better shaped hip for that particular patient? Is it because it's decreasing delivery costs? Is it because it's just lowering costs of production for the company? So answering that why is really important, to understand that there's, you know, there's a desire from the buyer. You did go into your revenue model, which was great, but answering that why will help you explain the return on investment. So I would say first talk about the return on investment before you start talking about the revenue model. And then lastly, I had a little bit of trouble understanding what you were actually delivering. Are you actually delivering the machine? Are you just delivering software? So a little more definition of exactly what you're handing over to the customer would have been helpful. So that's just some feedback.
Thank you. Do you want me to address the questions, or will I just listen?
If we have time for it, Jasmine.
We have 5 more minutes for answering these questions and Mark's feedback, and I do have a couple of audience Q&As as well. So it's up to you.
So just a quick address. So what we are providing to our customers is an optical sensor system that gathers data from various points, the powder bed, the laser power, and feeds that data back to the computer that the operator is using, enabling the operator to know exactly what's going on in the process. So it's a combination of hardware and software.
That's wonderful. Yeah, that clarifies a lot for me. Thank you.
Okay.
Okay. So my comment is you should have said that somewhere in the presentation.
Sorry.
No, I mean respectfully. I think you did a nice job at the presentation. You touched on the major elements we'd want to hear about. You know, you touched on the offering, you touched on the market size, you touched on the team, you touched some on the financials. So that was good. But I think both Kelly and Allison said the same thing. To Allison's point, I didn't really understand what the offering was till you just said it right now. Well, clarity, here's what we do. You showed a picture, and maybe we were supposed to glean that from the picture, but I didn't understand it. So more clarity on exactly what you're offering. And I understand you only had 5 minutes to do it, but a little more clarity on the offering, and really around the value prop. Why is it really? Why will they buy this from you? How does it work out for them? What's the advantage? And then you didn't really touch anything at all on how you'll sell this. You know, what is this direct sales as a channel, this sort of thing, which would also be interesting as well. But yeah.
So the selling is business to business. The 3D metal print companies are massive, and these printers sell for anything up to $1 million. From, I suppose, the cheapest one is 150,000, but they're very expensive machines. and it will be business to business, working with experts in the market that understand the market, and we have contacts in the market that are happy to work with us for these sales channels.
All right, we do have a couple audience Q&As here that I've been keeping an eye on. You know, some are just simply about how your technology works, you know, and how it's protected. So I want to start with the protection first. You know, have you gone through the appropriate like patent filings, the internet, you know, intellectual property, and taking care of all that? Because it sounds like this is a mix of both a hardware and a software solution that probably required quite a few steps of protecting what you've invented thus far.
Yes, we have provisional patents filed on our optical sensor system.
Okay, great. Okay. We've also got Mahesh asking, you know, who is your competition, and what stage are you at in the development of this solution?
So our competition are companies like Floor. They develop high-speed cameras, and they monitor the melt pool. So they take thermal imaging of how hot the melt pool gets. Then we have other companies that characterize the laser, and they characterize, like IPG, characterize the power in their laser. We do not have any direct competition that can monitor all the melt pool, the power of the laser, the profile, the layers as they go on, and the powder bed with one single instrument. The competition generally have to choose whether they want the power of the laser monitored, or they want the temperature of the melt pool monitored, or the profile, sorry. So
Okay, excellent. And I have one more question, then we're going to move on to Welnys here. And I appreciate you doing this demo and being first on the first episode of the first series here that we're doing this. I know that's a big task. And so the last question is revenue based, right? Because you put in some information about the market, about your ideas, about some exit strategies even, and fundraising. But specifically, you know, there are a couple of ways to go to market with something like this, right? Like, and what made you ultimately decide to go with your B2B strategy? And is it, you know, sort of a royalties type thing? Is it a license? Is it where it's a full implementation with ongoing assistance and customer support? Like, what will that ultimately look like as you support these clients? Because I imagine this is
So I can address that question if you're stuck for time. So currently we have a product that's been validated with Oak Ridge National Labs.
Right.
Once that product is validated, then we have contract manufacturers that can manufacture for DoD certified manufacturers, for original equipment manufacturers to OEM into the 3D printing manufacturer's machine. They will either be, so do I need to say any more?
No, that makes sense. I think some folks were asking, have you considered more of like a license or royalty instead of just pure OEM? And that is just sort of some of the feedback I got a few.
Well, I guess that'll be driven by the 3D printing manufacturing companies. If they want to do that, we're certainly open to licensing the technology under the right conditions.
Okay, got it. Great, thank you. So what we're going to do is Claire is going to head off screen. We're going to bring Heather on screen, but Claire will join us again for the last couple minutes of the show, and we'll share some closing remarks. So thank you again, Claire, and thank you to each of the investors for providing their feedback. And here's Heather. Thank you.
Hello. I'm just going to share my screen here. Can you see it?
Yes, we can.
Just get this video out of the way here. All right. Hey, everybody. I'm Heather again, the CEO and founder of Welnys, and we are a workplace wellness platform for remote and in-office employees. We're also an alumni of ERA Accelerator here in New York and Mass Challenge Health Tech program out in Boston. So the issue that we're solving is that 80% of mid to large size companies today offer workplace wellness programs for their employees, but they don't really have an effective way of doing this. They really struggle to find quality vetted vendors. They typically aren't tracking that utilization of their program, and they have no way to manage this centrally. So HR benefits might not know what's going on in each office. And so here at Wellnys, we're making it easy for companies to implement, manage, and to measure their health and wellness programs. And we do that through our 3 products. We offer video programming, in-person programming, and live webinars. Our video programming is perfect for remote teams, people working from home, global teams. It's on-demand health and wellness video content that can be streamed anytime, anywhere. Our in-person programming is our network of over 5,000 pre-vetted health and wellness vendors that will come into the office to provide fitness classes, chair massage, nutritionist talks, etc. And our live webinars are really the best of both worlds. It's a live speaker, but offered virtually. So today we have over 5,000 of these health and wellness providers, so we can really offer any sort of health and wellness program. It's everything from lifestyle wellness, like those fitness classes, all the way over to more medical things. We can do in-office flu shots, mammograms, dental cleanings, vision screenings, etc. As a marketplace, we really can offer any kind of service. And finally, we give our customers access to our software platform, and that platform helps them to track and measure their program. It provides back utilization metrics to the employer. The workplace wellness market is huge. It was about $17 billion in the US last year. About $5 billion of that comprises the in-person wellness services. We just launched a video this week, so we actually have a slightly larger opportunity with the new video product now as well. And today we're live in over 80 different offices around the US, in 43 unique cities to be exact, with our 31 amazing clients. We work with companies like PayPal, Walmart, the city of Boston is our client. About 1/3 of our customers are enterprise, about 2/3 are SMBs. And our customers love us, especially our enterprise customers. They have expanded substantially with us over the year. Our retention is actually 100%, so we have not lost a single customer. And we grew our revenue 200% year over year. We have on average a 50% margin on the in-person product and an 80% margin on the video product. And the way that we sell our services is under a SaaS model. So we sell monthly or annual recurring subscriptions, separate subscriptions for the video product versus the in-person product. And our average contract value is $7,000 a year for an SMB and about $70,000 a year for an enterprise company. The teams, myself, I'm the CEO and founder. I spent 6 years at PayPal running operations teams, and I'm also a certified Scrum Master and an MBA. We also have Shelby, who is our full-time salesperson. Giselle is our full-time wellness concierge, basically a customer success role. We also have a full-time sourcing specialist whose job it is to grow the supply side of our marketplace. And we use contractors for marketing, finance, and engineering. So our big vision is we believe that in the future, every single enterprise company is going to offer health and wellness programs to their employees. And Wellnys is going to be the company that powers them all. So that's it for me. Thank you.
Awesome. Thank you for that presentation, and thank you again for joining us. And I want to encourage everyone again, if you've got questions, to put them into the Q&A feature, and we'll kick off the feedback again with Kelly.
Great, thanks. Hi, Heather. I have so many questions, but I will try to keep it to one. I don't know which one I like better, but you flashed up some metrics around, I don't know if it was usage or engagement. I'm very curious across your customer base to date, like how are you defining customer health and success? Like what's your goal in terms of consumption or you know, how much engagement with your offering that the employee base has?
Yes, so the way it works with our in-person product is the employer gets a certain amount of credits with their subscription, and they redeem those credits against services. So they can bring in something different all the time, or they can do the same thing on a regular basis. And our wellness concierge coordinates that directly with each customer. And so our wellness concierge is responsible for helping them to utilize those credits and then also gather feedback afterwards. So we're in constant communication with our customers. We get feedback 24 hours after each individual event that we do for them. And so the main way that we're tracking happiness today is through that feedback. And because we have 100% customer retention, we know that our customers are pretty happy.
Okay, great. So I guess I was assuming there was some through software accessing the virtual experiences and talent and network, the folks in your network, and wondered if there was a portion of this where you're more hands off and it's a little more user driven and tech first. Is that not the case? I think you froze.
Hello, I'm back.
Yeah.
My Wi-Fi is going off and on. Sorry, guys. It looks stable now. So sorry, can you repeat the last bit?
Yeah, I'm sorry. I'm taking more time than I should. I was assuming that I thought I understood that it was there's the in-person. I understand the credits and the consumption based on in-person resources on your network, but I guess I was assuming, or maybe misunderstood your presentation, that there was a user-driven element to this where you offer almost like a marketplace model, and that they're self-serving. And I wondered what the level of consumption or engagement on that aspect was.
So the employees are our end users, but they're not our buyer. So on the in-person side, the HR person is always choosing the programming from the marketplace. The employee is never doing that.
Oh,
They're
understood. Okay. Is that where you're going with this, though, eventually? Do you anticipate?
No, I don't think we'll ever have a model where the employee is choosing that programming. In the corporate space, this is typically run by either a wellness committee, people experience team type of thing. And they're the ones that are really choosing what programming they want to support based on their own company goals.
Okay. Thank you.
Mm-hmm.
Great. Thanks, Heather. Great pitch. 2 questions for you. I have seen a good number of companies, particularly over the last year, in the corporate wellness space. So what would you say is your biggest differentiator from your competition? And my second question is, I think, one question in my mind is this a nice to have or a need to have, and will these programs or will these services be able to maintain themselves in a recession? So I'm curious, with COVID, what you've seen from your customer base.
Yes. So there are about 3,500 corporate wellness companies out there. So there are a ton of them. What we are is an aggregator. So because of our marketplace model, we take all of those companies that fall within our niche and we roll them up under one solution. And so that's what makes us different, is that a company, instead of now having to go and secure a new vendor for their mental wellness and for their Headspace meditation app and this and that and the other thing, they can now work just with wellness, but get access to over 5,000 different vendors. So that's what makes us unique. We're really the only health and wellness company for the workplace that is taking that marketplace approach. To your second question, nice to have or need to have, wellness programs, as I mentioned, are highly adopted, about 80% in the US, and similar statistics in Europe as well. So these are things that employees now expect as part of their workplace. And I believe even more so in light of the pandemic that we're in. I think the emphasis on employee health and wellness will actually grow because of this. I think the way that it's implemented may shift more towards virtual, and that's why we launched the virtual product, the TV product.
Great, Very helpful. Thank you.
Heather, real nice pitch, well done. It took me a little while, in fact, through some of the questions that Kelly asked and Allison asked, to really get that it was a model, a marketplace model. And so it does something around the competition and so on. Let me understand, how much of your business do you think will be virtual versus in person? Where do you want it to get to? They're pretty drastically different margins, right?
Yes, 50% on in-person, 80% on video. So as I mentioned, we just launched video on Monday. So it's certainly brand new for us to see what that adoption is going to look like. But we have already this week had a number of inbound sales inquiries from companies that are now seeking a virtual health and wellness solution for their employees as they're working from home. And we also have all of our current clients trialing the platform now. So it's going to be TBD in terms of the breakdown between the two to see which one really emerges as the winner for us.
Okay, do you have a preference?
Certainly the video is higher margin and it's lower touch. And so that would be the preferable business model, but there's more competition in the video space, whereas the in-person is a harder problem to solve. So there's less competition really solving that at scale.
And the in-person's where you've already got this big database of, I suppose, sort of 1099 consultants that can come in and do this for you?
Yes, but the beauty of it is they are now our content creators on the video side. So within our week of announcing, we had 100 of them sign up to create videos for us, and we have already had 100 videos submitted.
Cool. So what was last year's revenue?
Since we're on a call of 200 people, I'm not going to share that publicly, but I would be happy to send that to you.
Okay, that's just fine. Terrific. Enough for me. Go ahead, Jasmine.
Okay, awesome. So one question people are asking about is just if you are indeed raising right now or looking to raise, or if not.
We have actually paused our raise because of coronavirus. So we will potentially pick that back up in the fall. It's just not good timing right now.
Okay, if you pick it up, or you know, are you looking more towards building out this TV platform, or do you think at that point in time you'll be able to reevaluate and restructure to make sure you're using the funds for whatever can help develop probably the next version of the platform?
Yeah, so right now they are two product lines that we offer, and we will probably continue to offer both of those product lines. It provides us the ability to sell higher ticket prices to our clients. Instead of having one thing to sell them, we have two things we can sell them. And it's a more holistic offer for the buyer in that they now have a solution that can support not only their in-office employees, but their global and remote workforces as well.
Of course, absolutely. Well, I have one more Q&A and then we're going to bring Michael on. And I was wondering this as well. You've got some pretty big clients. For example, PayPal is one of them. How much of PayPal's contract represents your total revenue in percentage?
It's probably about today less than 15% of our total revenue. So we have a number of enterprise customers: IDEX, UniFirst, MongoDB, Plymouth Rock. So at the beginning, they represented a much higher percentage, but we've diversified pretty good since then.
Okay, great. Yeah, only because I mean the difference between SMB pricing and enterprise pricing was about 10x. So I was curious to see how that broke down. And so we're a couple of the attendees here. All right. Well, thank you for that feedback. Thank you to everyone. Thank you for the pitch. We're going to bring you back on during the closing remarks, and we're going to bring Michael on for his final pitch of the three today. Thank you.
Thank you.
Okay, hi, can you hear me, Jasmine?
I can hear you. You've got 5 minutes. I'm going to time it. If you see my face pop up, that is when it's getting to be time to close it down.
Okay, I'm going to share my screen, and if you don't see it, please raise your hand and let me know.
We got it.
Okay, great. So as I mentioned, we're a Hoboken, New Jersey-based company that has been working for 1.5 years on an AI-powered precise positioning system. So if you think about what GPS did in changing the world outside from a location apps perspective, I like to say that 90% of our time is spent inside, and where GPS fails the most is in large, densely populated buildings like hotels, schools, commercial buildings, office towers. So we set out, as I mentioned, 1.5 years ago to do two things. One is to do accurate or precise microlocation tracking of thousands of individuals on these big sites, and to set up geofences, in other words, in different rooms, to set up geofences so that we can track when people enter and leave a room or enter a classroom. And there's a number of things you can do with this, which I'll talk about in a minute. The most surprising, and I would say, frankly, the once in a lifetime coincidence, is that we discovered in the last month of this pandemic that what we've built is basically 90% of what's needed for contact tracing and for social distancing enforcement in the workplace. So we are currently fast tracking the remaining 10%, which is basically a reporting and analytics tool that takes the data out of our mesh network and puts it into an analytics tool for example, a superintendent or for an office tower, building owner to make sense of contact tracing. And we'll talk about that more in a second, but as we all know, there's $1 trillion in losses this year just from this pandemic alone. I think most of us agree we're not going to be out of the woods next year unless there's a vaccine, but even just dealing with the flu and other things. So this is a segment of the market that came upon us very recently. We set out to basically improve workplace safety and security. And by focusing on, for example, panic button tools that are being widely adopted and widely implemented in hotels and schools to give, say, frontline workers the ability to immediately report an emergency, the location of that emergency, the type of emergency it is, and give that data a whole extra layer of view to responders so they can take action on that. So as I mentioned, now the priority, of course, in getting people back to school and back to work safely is on contact tracing. So we're being asked by our beta sites to fast track some of this. And the panic button feature is still an element part of it. But as you can imagine, contact tracing is really a requirement for all of us to get back. So if you look at some of the use cases on the left, there's contact tracing, there's a panic button system. Some of the schools where we've done betas are asking us to use our location tracking for automatic rostering and attendance. We've, so far from a beta perspective, we've done a couple betas or pilots in schools in New Jersey and Ohio. We beat out the #1 panic button system in Las Vegas at Caesars Resorts in a deal. And now, as of a week ago, when I spoke to them, they're going to be adding our contact tracing features as soon as they're back and open in May. So we've got some good traction. We've got some validation on our location information from one of the top players in E911 call centers called Rapid SOS. So we know we're onto something special with this. We didn't realize at the time how big it was and has grown because of this pandemic. And when you think about the pandemic, I think we all know from the news, it's coming down to these elements that are going to get us safely back to work and school, which is new types of access control to the building, like fever temperature taking, social distancing rules that are enforceable without an army of people to do it, contact tracing. Mayor Bloomberg and Cuomo just announced a major tri-state initiative to do contact tracing, but they're throwing a lot of people at it. We've got a way that we've already built and tested to automate that, and I'll show you in a second. And then finally, to define social distancing parameters like room capacity, and if that capacity gets exceeded, to set off an alert to the manager or superintendent or the principal of the school. And of course, across all of this is privacy protection. And the way we've built our mesh network doesn't require any phones, no Wi-Fi access, no GPS. So we're not using people's phones to track their location. This is just another summary of this, but given the time frame, I'll skip ahead. This is a summary of why it all comes down to precise location and geofencing, right? If you think about it's about knowing who's on property and where, and if there's an infected person or even a person with a fever, is activating a trace back 7-10 days of incubation period to find out who they interacted with, what were the durations of interaction, and coming up with a prioritized list of the exposure ring and who's most affected so they can do proper contact tracing. So like I said, this is a real product that you're looking at here that we've built. It's an iOS app that has a live floor map that's custom for each site that we sell to. It shows where everyone is in each room. You can see a drop down of students in a particular classroom, what attributes they have, like one is maybe a resource officer, somebody trained in CPR, And what we're adding now is the ability to tag people who entered the building with a high temperature. And this is, again, private information that only the school would have access to. And then the sensors that you see at the bottom are alerts to either emergency situations where people need to take action, or on the right, you can see there are buttons with LEDs to give, for example, teachers the ability to immediately alert to an intruder in the building. And that, what you'll see in the map, will show his or her location and what type of emergency it is. So this is what we've got. We're going to be shipping in June. And as I mentioned, we're adding the reporting dashboard for contact tracing as we speak right now. And that'll be available for paid pilots in June. One quick thing on why app-only contact tracing is not reliable. The biggest test case of this, Singapore was the first country to launch a contact tracing app a month ago. This was in the Wall Street Journal 2 days ago. It's basically failed because they have less than 20% of the population has adopted it. They're worried about privacy. And yet Singapore is a country that is pretty small and trustworthy government, but people still feel they're going to be traced. To give it some perspective, got less than 20% adoption, but they need 75% adoption for contact tracing to be reliable. We think we have a much better solution because we're doing it in a private network within each school or within each hotel or each corporate office tower. We're a SaaS, a B2B SaaS company. We throw in the sensors with a per user price that's very accessible, $5 per user per month, gets the school all of the sensors that they need to track and privately track each student or each staff member. And then with the contact tracing and social distancing parameters and some other features that we already have, we can get the price up to about $10 a month for a gross margin of 75 to 90% for us. We've raised $500,000 to date, which has gotten us basically V1 product. We have a very efficient capital model, as you can tell. We are ready to start shipping in June, as I mentioned. But at the same time, because of the pandemic in particular, we're raising about $1.5 million in pre-Series A money, convertible note, to accelerate our launch and sales trajectory this year. As I mentioned, as we all know, this is needed to get back to work and school. And so we don't want to miss the opportunity to help and also to build a business with the situation that we're in. Last is the team. I've been an early executive running sales and marketing operations for 2 enterprise software startups that went public and got sold for over $1 billion. One of the founders and CEO of that company is an investor in this company, Volan. He's on our board, very active member of my extended team. I used to work for the CEO of MongoDB, David Echeria, also New Jersey based. My CTO is a genius from MIT, PhD in electrical engineering, rocket scientist, cryptocurrency, deep math kind of guy, just amazing at thorny, difficult problems. And my CFO, interim CFO, was the CFO at SilkNet, which was one of the multi-billion-dollar companies that exited that I mentioned. So lucky enough to have him on our team. And second from left is James Wood, who started SilkNet, which is one of the first web-based customer relationship management software programs. And he is the gentleman who is one of our key investors and board members. We've got our supply chain in place through another investor of ours, Marbo, and we're able to produce a couple million units per year right away. So that's the team, and happy to hear some questions.
All right. Michael's pitch went a little bit long here, so we might have to go a few minutes over, but we'll start with Kelly for his feedback.
So hard to prioritize. Okay. So I've looked at solutions around this space a bit, our firm has, and there's an opportunity in network effects with these types of solutions. And you were describing a network in the school example, like a school-only access to a network. Have you thought about creating a little more of a network effect outside the school, like for first responders? Is there a slice of this that, you know, firemen, the police department, like, can have some visibility and as an extension of what you're doing for your core customer, that would have some value.
That's a great point, Kelly. Thank you. So one of our early investors and strategic partners is it's a big company in Ohio that sells into schools, and they're going to be distributing our product in Ohio. And they introduced me to a police captain about 6 months ago who opened my eyes to the need to give first responders a live view of what's happening at the scene. So as police or fire are arriving on site, they would have access to our app. They could see where everyone is in the building, or if there was an evacuation ordered, if there's a 10-year-old child stuck in a closet somewhere because there was a
100%.
lockdown.
Yep.
And I have to admit, you know, I missed that early on. I missed the need to give the responders that view, that live view. And this police captain opened my eyes to that. So now the model that we're going to be pursuing is to enable them to have, of course, have free access to that. They're going to have a kit of our sensors so that when the first responders enters the scene, and this is where the police captain really changed my thinking, the first responders become part of the live mesh so that the dispatcher in the parking lot can see where they are instead of saying I'm on the second floor, you know, east wing, trying to describe it.
Yeah, I think that's brilliant. Cool.
Thank you.
Thanks.
Great job, Michael.
Thank you, Allison.
Just one recommendation is I would move your team slide to the top of your deck. You have a great team. You have an excellent background. This is a very big vision, and I think it will just add credibility from moment one.
Thank you, sure.
And then, you know, my question really is about the core technology. In a way, it just comes off as like too good to be true. You know, no Wi-Fi, no phones. And I'm assuming that has to do with the sensor tech. So maybe you could just take a minute to dive one step deeper on how the technology works, and then maybe just a sentence on, because I've also seen other players in, you know, wayfinding technology, how you differentiate.
Sure, it's a good point. So we've got some experience in building this type of mesh technology from a previous startup that I ran and exited called Gemio, and we had built a mesh network to connect a crowd together in live events. And through that experience, we actually sold a bunch of the product to Caesars, and Caesars came back to us about 2 years ago and said, we love this network technology, but can we apply it to a panic button situation where our housekeepers need the ability to report, you know, an assault or an emergency from anywhere on a large property? And so that really got us thinking on how to do it. And we knew from them that it could not rely on GPS because that would require the housekeepers' phones to be used, which was a no-go for them. And also, we wanted it to work in the event of an outage, or even the name of our company is actually named after John Volan, one of the lead rescuers from that Thailand cave issue, 2 years ago, where, you know, I was envisioning that if they had Volan sensors, they might have been able to find those kids much more quickly. So to cut to your question, we just really were strict about building something that was pure mesh to mesh, meaning peer-to-peer communication and not relying on the beacons on walls. So the traditional technologies like from Apple, for example, where you've got your phone, you walk in the store, a beacon picks up that location and says, oh, I know Allison is here. What we built is something that is true peer-to-peer, so the location happens through beacons, but also through proximity to other people. So even if all the beacons in our system were to go down, our sensors that are on people convert into relay sensors. So you'll never be without a network as long as you have people there.
Very helpful. Yep. Excellent, thanks.
So Michael, terrific job, real nice presentation. Talk to me a little bit about strategy. It sounds like you came into this focusing either on the hotel space or then maybe focusing on selling into schools and such. And it looks like now you're interested to make a pretty major shift based on the COVID-19.
Well, it's actually not such a major shift, Mark. It's a good question. So it's actually more of prioritization. So we built specifically for hotels and schools as a use case because they're very similar use cases from a location-based panic alert. They've got a big need, as we know from emergency situations. Unfortunately, New Jersey is the first state in the nation as of March last year, mandated the use of panic buttons in hotels. There's a lot of talk about that happening in schools, but, and actually, you know, several cities have mandated the same. Caesars, the housekeeping union, has mandated that they outfit all the housekeepers with panic buttons.
Yep.
So there's that's what's been driving it. And like I said, it's a similar use case, but with the pandemic, that of course has elevated the priority and pain that companies are having to solve it. As soon as they solve contact tracing and social distancing enforcement and we're back to work, it's going to shift back to, you know, how to prepare for active shooter situations, or just plainly, you know, some child who has an anaphylactic shock and needs immediate medical attention.
So just, and I know we're tight on time, but so then just as we try to work our way out of this COVID-19 situation, what's the low hanging fruit for you? What do you know, you're raising more money right now because you're going to really go after it. What are you going to go after?
We're going to go after a much better location-based panic button system that doesn't rely on anybody's phone and doesn't rely on Wi-Fi and has its own batteries. So technically there could be a power outage, but the very high pain point prior to pandemic is giving housekeepers, teachers, the frontline workers, who are essentially the eyes and ears of a big organization, the ability to report an emergency and give responders a whole new layer of information on how to respond and who's in the risk perimeter, giving that to them. So that doesn't go away at all. In fact, it's going to come back really quickly, but people have bigger things to deal with right now.
So your raise right now is going more towards product development than sales and marketing?
No, we're almost finished with V1 of the product, actually. So we can launch with what we have now. Our partner and investor, who's our supply chain partner, has committed to get us to market under his resources. So we're going to launch. The money raised is actually to scale this up from a support perspective, so we can have people out installing these quickly. And also on the sales side, just we need more sales reach to reach more states quickly. As you know, a lot of the pandemic initiatives are being led by governors. So to the extent that we can get access to governors quickly before they spend an inordinate amount of money on a manual process, you know, we're gonna scale really quickly.
Great, thanks. Very nice.
Thank you, Mark.
All right. Thank you again, Michael. We have a lot of questions here, and most of them, you know, in the respective time, I only want to give another minute or two here. I know everyone's got busy days, but the biggest question is people are concerned about privacy and about data mining or data access, and that's truly the most important thing that's coming in here. I've got a couple questions around that. I know you mentioned a little bit in this deck, but how are you addressing the privacy concerns, and how do you get folks to opt in? And what if people don't want to carry around this sensor that are in schools, or what if there's a concern about the devices? How are you combating that, and how are you protecting data?
Sure, it's a good point. A couple of comments there. One is ours is more of like a smart badge system that, you know, you need to basically be on property, right? And schools can enforce this because they have responsibility for the safety of not just the students, but the staff on school, and same with hotels, for example. So it's take the school scenario, for example, everything that kids do on Chromebooks and everything is already being tracked, as we know, by their usernames. The difference with our system is on each sensor is only a Bluetooth ID. So if someone were to find that sensor or hack it, it means nothing to the person who found it if it gets lost. And because we're using Bluetooth mesh, when it's outside the range of the school property, it loses its signal automatically. So there's no identifiable information on that. The only information is what the school decides to correlate with student names, for example, but they already obviously have very strict privacy policies that this would fall under. So that's that. And then two is, I would say the other big issue with GPS-based tracking that everybody worries about, including me, is that it can be tracked, you know, you can track everything about your location. Like I said, we're not relying on GPS at all. We deliver the information from our mesh network directly to an encrypted iOS app on site. So the only person who has access to that information is the authorized, you know, principal superintendent.
Got it. All right. Well, thank you for that. I'm going to ask you to stop sharing your screen and ask Claire and Heather to come back in here for 2 seconds of closing remarks. And I want to thank everyone that asked questions in the Q&A and submitted things in the chat. Obviously, the council's got a lot going on. You can visit us at njtc.org if you want to learn more about upcoming events. I did share the application to pitch on this show. We have future episodes coming up. You can learn more at the New Jersey Tech Council website, and I did paste the link to apply in the attendee chat feature. But very quickly, I want to thank you all for participating in the first episode of Startup Showdown and our Jersey focus here as the New Jersey Tech Council. I would love to just, again, thank all of you for participating. And I want to just, let me see if I can get Claire to get her video on. But I want to just have, each of these investors, oh, hi, Claire, just give us your 2 seconds of feedback on overall, what do you think high level of each of these companies we brought to you today? And what are your thoughts about even whether you're interested in chatting with them further or overall what you think their growth potential might be? I know that's a big ask, so take a second if you need.
I guess 1 minute.
Oh, does that mean I have to go first?
Yes.
Well, it was interesting because I think the businesses and offerings appear to be at different stages, and the maturity of the business, the strategy, the model seemed to be increasing as the presentations went on. I think that, we're tech investors, so I like it. We spend a lot of time in the HR kind of tech stack and solutions for HR. So there's some relevance there for us today. Though I think the services aspect, getting annual contracts is great for a service you're delivering, and the retention metrics are incredible. But thinking about how the gross margin profile can evolve, maybe with more tech, more self-serve, that would be something that we would potentially lean into and like that space, and certainly believe in the opportunity for corporates to do more programming and resourcing to that end. So I like that a lot. And then, AI is such this big sort of vague thing. And as you Michael, starting out, I thought, oh God, like as soon as the AI name label comes up, it's, where is this going? I really hope we're going to go right to use cases. And you did. And I also have more knowledge and familiarity with some of the tech and the use cases and solutions you're getting at. So that resonated a lot. I think what I had a bunch more questions there around go-to-market, and I think that's something you can incorporate into your presentation going forward. How are you thinking about this? This is a very big opportunity, potentially fairly complex for the buyer to grok and deploy. So, your salespeople, can you attach yourself to channel model and folks who can accelerate things for you? So go-to-market was something I was wanting for, I guess, but the use cases are compelling, and the tech seems to be as well. So congratulations.
Thank you, Kelly. Perhaps we can talk about that go-to-market offline.
Yeah, would love it.
Thank you, Kelly.
Excellent. So, Michael, Heather, Claire, you were all excellent. And as a former founder myself, I know how hard it is to get to where you are. So congratulations. And you guys are all doing great. As far as finding, the right venture investor, it's always about finding, there's so many investors out there. It's finding the right investor for you. For us, we really focus on pure software plays, but we have we have a few investments in our portfolio that are software-enabled hardware. So, I wouldn't say it's not possible. One item that we always look for is recurring revenue. Even though I'm an early stage investor, we look for a minimum of 10K in monthly recurring revenue. So both Claire and Michael are a bit early for us, but would love to stay in touch. As far as Heather's company goes, wellness is an area that we've looked a lot into. We just haven't been able to get so excited about, I think we've seen so many that it's been hard for us to really, figure out what the differentiator is there and what gives one player a really massive outcome. Heather, I'm sure you will achieve it. But I think just HR tech in general, we've seen a lot of it, and I think we're actually shying away from it a little bit because of just the amount of competition that's in the space today.
Got it.
So let me start off by saying, Jasmine, I think you did a very nice job bringing us 3 fine New Jersey companies, and isn't that nice? So great. Claire, yeah, I think you're early for all of us. You've got a lot of expertise and a lot of motivation in what you're doing there. You're passionate about what you're doing. I think you've got to sort of prove out the technology and advance the business model and so on. But I like what you're doing. So keep it up, I'd say.
Thank you.
Heather, I like marketplace models. I think they're really difficult. But when you started off by saying we're a wellness company and selling into enterprise clients, I thought to myself, well, so are 500 other companies doing it. So the differentiating in your approach, I can see. And it sounds like you've got some revenue and you've got, I think you mentioned a number of enterprise clients. So it sounds to me like you're getting some traction, you know what you're doing. So terrific, good for you. And Michael, finally, I like someone who shifts when the opportunity presents itself, and COVID-19 certainly has presented something. I don't yet even close to understand your technology, but I think the use cases and how you describe your solution and the needs, they seem very, very real to me. So I have no doubt that someone's going to be successful in that space. I hope that it's you. And love to learn more about that too.
Thank you, Mark.
So Jasmine, congratulations on a very nice program and bringing some really fine people here together today.
Well, thank you. And thank you all again for participating. I want to just quickly mention to those of you that are in the audience that might be interested in learning about each of these companies, their information is on the Startup Showdown website. And if you're interested in investing in them or being further partnered up with any of these organizations, you can reach out to me. I'd be happy to facilitate an introduction if it makes sense. So I want to definitely stress that we're at the council here able to hopefully bring some good connections together. And the last thing I'll say is that we're going to be doing this twice a month. We're doing one in May for clean tech and sustainability companies, which meshes quite nicely with our launch earlier today of the Clean Tech Alliance with founding sponsor PSEG and the $50,000 Clean Tech Impact Challenge. You can learn more about that at the New Jersey Tech Council website as well. That'll be our next episode, and I hope you'll all join us. And really, I just want to say thank you again. I know that this is an interesting climate. It's weird to come together digitally. I wish we were all on a big stage somewhere and doing this in person. But I really appreciate all of you joining this first episode, participating, giving your feedback, presenting your pitches digitally. And again, if I can ever be helpful or if anyone has more questions or wants to be involved, you know where to find me.
Thank you, Jasmine.
Great job.
Great, thanks so much.
Thank you for
Thank
having
you.
me.
Thanks, everybody. Great to be
Bye.
involved.
Thank you.
Thank you.